Good morning, and very happy to welcome all of you for the first edition of the High-Level Expert Forum for Sustainable Finance, organized within the framework of the Level EEI project, EEI standing for Energy Efficient Investment. What is this Level EEI? It is funded under the European Commission's multi-annual framework program called Horizon 2020. It's a 3-year project. It started on September 1st, 2020, last year. And the project aims at making energy efficiency and sustainable energy investment products more competitive. It conducts behavioral science field experiments to assess end users' demands for environmental products. It also reviews the compliance of green marketing claims associated with financial products and evaluate the offer of financial environmental products to meet the potential demand by end users. The findings will provide fresh insight into current regulatory schemes at European level, support the spread of the solutions throughout Europe, and deliver a database for environmental financial products. The consortium of the Level EEI project is 4 partners. First, 2 Degrees Investing Initiative, an NGO that will coordinate the research work, will provide engagement with the industry, with policymakers, etc. We also have the University of Maastricht in the Netherlands, who is dealing with the research on behavioral science in retail finance. We also have the World Wildlife Fund, WWF, European Policy Office, who is contributing to the articulation of technical analysis and policy work at EU level on the topic of environmental contribution. And Better Finance, who is making the link with citizens as savers and individual investors through its member organizations throughout Europe, and dealing with stakeholders' engagement, including the organization of this event. So let me, in this introductory speech, tell you about the top priorities of Better Finance in sustainable finance. As you know, Better Finance is the European Federation of individual investors and financial services users, and EU citizens as savers, as individual investors, and sometimes shareholders have a major and critical role to play in sustainable finance, if policymakers and financial intermediaries allow them. Indeed, by nature, savers and individual investors are mostly long-term driven. When you look at their assets, they are more than 80% long-term, and only financial assets more than 60% long-term. And that is understandable, because by nature their goals are long-term, for retirement, for housing, for children education, for transmission of wealth. And EU citizens are also by far, if you look at European economic statistics, the main source of long-term funding for the EU economy. So sustainable finance needs to acquire and retain their trust. This is a challenge given the current very low confidence of EU consumers in finance in general. So to achieve this, we have 5 top priorities. First, we need to help maximize retail investments' impact on the environment, on social matters, and on the governance, the famous ESG. And of course, naturally, our preference goes more to Article 9, what we could call impact investing, over Article 8, and of course Article 8 over Article 6. I am of course quoting the taxonomy classifications. And of course, energy efficient investment is one of these really impacting investments, and a very important one. The share of construction and of housing in greenhouse gases emissions. So I have a dream that we can trigger massive energy efficient investments that will soon convert a significant part of housing and office buildings into zero or even positive energy ones. So we need to design the right vehicles for individual savers and investors to invest effectively and in confidence into such projects. So that's number one. Number two, we need to minimize greenwashing to maximize impact and fight non-intelligible or misleading information, and in particular, improve ESG ratings, because individual investors and savers will not have the time, sometimes the expertise, to read, very big documentations on each retail green investment product that they are offered. So ESG ratings will be extremely important. We performed a research on sustainable investment funds, 283 equity funds, 37 bond funds, and we looked at the ratings from 3 leading ESG rating providers for a total of more than 1,000 issuers, investee companies, and of course, about more than 300 funds. The results are concerning. 50% of issuers, investee companies, are inconsistently rated by the 3 rating providers. They don't get the same rating. Same thing at the fund level. Most fund ratings are misaligned, either fully or partially, a majority of them. So this, again, raises important concerns about the reliability of information available to any investor, not only individual, but asset management companies do use ESG rating. So that is why Better Finance fully supports the ESMA's European Securities and Market Authority call for a regulatory framework for ESG ratings. Number 3, again, to maximize impact and minimize greenwashing, this has to be done via a meaningful and trustworthy EU eco-label for retail investment products. As you know, the Commission, the European Union, is working on an EU eco-label for retail investment products. Better Finance is the only financial user organization to sit, as it asks for it, at the EU eco-label board, so that we have an EU eco-label that will allow consumers to rely on a trusted and credible label when investing in green products. And we are happy that the criteria proposal that at this stage are bringing a better alignment with consumer expectations and the vision of the European Green Deal than previous draft projects. Number 4, sustainable corporate governance. We need a sustainable corporate governance, which means to allow and facilitate the long-term engagement of individual investors with their investments and with investee companies. And also for other asset owners, as they are called, to engage and not disengage. Because when you are a co-owner, an investor in equity, you are a co-owner of investee companies. And investing in businesses comes with rights, but also with responsibilities and duties as co-owners of these businesses. And despite the great importance that the European Union places on shareholder engagement to date, especially with the implementation last year of the Shareholders' Rights Directive number 2, the exercise of shareholders' voting rights is still extremely difficult, especially cross-border inside the EU, because of the antiquated, fragmented, and complex financial intermediary chain between the issuers, the investee companies, and the small shareholder, and also because of omnibus account. So from the perspective of sustainability and all the initiatives from the European Union on sustainable finance, on zero net emissions target, it's extremely important to improve the exercise of individual shareholders' rights. And research, especially from To The Green Investing, has revealed that European people want to express their sustainability preferences by exercising their voting rights. However, due to these barriers, it's extremely difficult to do that and to exercise our sustainability preferences towards the investee companies. So therefore, it's crucial to lift these barriers, to create the right push for companies to accelerate their energy transition. And I have two examples which show that there is still a lot to do there. One is the Enron story lesson for Europe. You can find it in the blog section of our website, where impact investors managed to get 3 independent directors into Exxon, sorry, not Enron, Exxon, the biggest oil company, to push for a much more accelerated energy transition. And that's what we should do, and that's what also the big institutional investors, who are, by the way, managing our own money, it's not their money usually, to engage into the energy transition and not divest to non-European investors, meaning selling on the cheap the huge investment capacities of the big European oil companies. The free cash flow generated by oil majors this year only is estimated at $200 billion. There is a lot you can do with this for the energy transition. Another example, when investors are not directly shareholders, but they are in funds, for example, in the US, by law, you need to have 2 independent board members of every mutual fund to represent the preferences, and especially, of course, the sustainability preferences of retail investors. In the EU, there is nothing about this governance of retail investment funds. Lastly, we must still, with green products, ensure the long-term and sustainable value creation, which means decent long-term real returns for pension savers, including for green investments. That's also part of fighting greenwashing, because the primary objective of pension savers is to address the pension gap, which is, as you know, a huge issue, and to try to strive for pension adequacy, which is in jeopardy. So we need to avoid value-destroying retail investment products, even if they are marketed as green. Pension savings should not be confused with donations. It's too important, too critical to allow people to sustain their living needs in the old age. So there also information will be critical, transparency will be critical, and we ask, for example, that the fund providers, the retail investment fund providers, clearly report to long-term savers the long-term performance of their funds compared to the mainstream long-term capital market performance. So I try to be quick on our key priorities. I could speak for hours about the events. As you know, it's a 2-day event. Is gathering about, and we are very excited about it, it's about 300 participants, registrations from all sectors, and as you will see and hear, tens of high-level experts as speakers or panelists. So you have a lot of panels, presentations, workshops, and please pick among the sessions and the ones you will like. I would like, of course, to thank a lot all the speakers. There are tens of speakers from the industry, from the commission, from academia, from think tank, etc. And I would like to thank in particular Ugo Bassi, who is the Director of Financial Markets at the European Commission of DG FISMA, very high level executive. I would like to thank Sirpa Pietikainen, who is a member of the Econ Committee of the European Parliament, and I can witness a long time and passionate advocate for sustainability and sustainable finance. And also Nathan Fabian, who is the Chief Responsible Investment Officer, I told you about responsibility, of the UN Principles for Responsible Investment, and chair of the Sustainable Finance Platform. So again, discover all the session and select the ones you want. I would like also to thank 2 partners who actively partner with us for these events, NASDAQ and Mazars. And I will stop now to give the floor to Thibaut Gérardi for his keynote speech. Enjoy the event. Thank you.